Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Thursday, May 31st, 2018. Today we saw the markets get hit again, and it's been a very, very volatile market, and things have pretty much been lined up exactly as we've been anticipating. This one's been a little bit strange because we didn't have all of our the three categories together, and what I meant by that is we time-wise we had a window, and I'll show you the window, and that was in place. Sentiment, we did get a high reading, but technicals as far as patterns and stuff was not in place. So when we're in that kind of environment, what you simply do is just step aside and wait for everything to line up. And with yesterday's big move to the upside, it went right into our timing window. Sentiment hit an extreme, and we had technicals that were looking for the market to move lower, and that's what took place today. So I'm going to recap a couple quick things here, because it's I'm not quite sure how you guys, whoever's not members, run with this market without knowing when to anticipate when this market is going to reverse, because it really does leave you behind, and unless you're knowing what to be doing, whether in my case moving to cash because everything didn't move together, it didn't fit together, or getting out of your long positions heading into a turn date, you get absolutely clobbered. And at this information, I'll challenge anybody listening right now, find me another newsletter that has done this as far as predicting. This is going back to April 10th. What he was looking for was looking for a trading high due around 417. So this is the April 10th report. The 18th was the exact top. From there, he was looking for a low in early May. This was May 3rd. That is considered early May. And I had these blocked out as far as the rally, but here are the dates now: 525 and perhaps even into 6.5. Here's 525, and this is what happened. He did elect on the 22nd, when we got this this move, that it was this was the top, because we did get a we saw a 94% bullish reading. So even though we had the 25th was not the exact top on this, it was identified on the 22nd. So the 25th was there, but again, this was recorded all the way from April 10th. So this is almost a month and a half out, and he nailed the three tops. And if you were just going to trade these here, you had over a 100-point move to the downside on this low. You had over a 100-point move to the upside. So it's over 200 points on the S&P with two simple trades, and you knew exactly what to be doing. So now this is from today's report, and again, we had a 93% bullish reading on yesterday, and from this, it was the profile was suggesting that in early May, the low followed by strength into this week. So that all turned out to be in truth work out as planned. Now, this is some of the some of the important pieces. Is that the first part of the upside is clearly tiring, and we have a kill zone that is, as a minor kill zone may occur after this. So this was going from this high here, that after this we are looking for a kill zone, and a kill zone means that there's a sharp drop to the downside. That's typically what happens on it. The market, as we see, has entered into a new degree of risk. There's good and weakness due in June, and again, we have the dates when to expect that into, and it may become very hard to the downside. It's this nuclear spook is only a metaphor for more market trouble. So we've been saying this the entire time, that if you the market had no volatility for so long that everybody got used to it, and from there nobody knows how to trade this volatility, because the reason why I know this is, notice when everybody gets bearish on the markets, they are getting bearish at the exact lows, at the exact lows, at the exact lows. Look when they're getting bullish, at the exact tops. So nobody really understands how to do this, because we didn't have volatility in this market for close to 3 years, and now it's here. Everybody thinks they know what they're doing, and from this, what's happening is they're getting bullish with these gap ups, and they think it's a breakaway from that to see the market come moving down. These big moves down, everybody turns bearish. Guess what? That's your buying opportunity. You knew it the whole time, if you remember, and this is what happened. And from here, it got choppy. This is when I stepped aside after we started getting into this, and now we had that big down move. But the fact that we moved back above an important support level, I was not looking to get short. And after today, we had the spike up, and then we came down. This is the time to look to get short. And like I said, if you don't know what you're supposed to be doing from these turn dates, it's you're running blind. And I just, it amazes me with when I get some emails from people saying, that the service is too much money and this and that. I mean, some of the institutions are paying $25,000 a year for similar information, and I mean, just having these dates alone. I mean, I don't know what you trade, but let's just say you just did 2 S&P contracts on futures. I mean, 200 points on that is $20,000. If you did options on this, you made a fortune. And that's, what vehicles you trade is is what you do. We don't put out those specific trade recommendations. What I do is I will send out buy and sell triggers. And so for today, what the sell trigger was once we came down and we formed this little gap, right, this little the zone. What it was once we took out the 2707, that was your short trigger, and that's when we got short, and the stop goes up here. Now, if it gets stopped out, so be it. We turn around and just wait for the next setup, but we just know that the long side is dangerous, and we know that because we have a particular turn date that has come into play. And like I said, if it goes into next week, that still fits the profile on it. You don't get bullish if we spike up for some reason. You turn around and just wait for the next top, and then you look to short from there. And that's really how you make money in this market. It's not, you can use your technicals, you can use your Elliott waves or whatever you want. If you don't know when the market's going to turn, the Elliott waves and all that stuff, they extend and they waves get clustered up, and this is, for me, I think it's been the easiest trading environment that I've been in all of my trading career, and that's over 20 years right now. And the reason why is when you know exactly when to expect these tops, you just adjust your portfolio, and when you adjust it correctly, you make a lot of money, because these the moves that are taking place, a majority of the big part of the move happens within the first week. So if you get in at the lows and you're buying options, and you're buying the 250 sevens or something on the SPYs, and next thing you know it's at 267. I mean, again, you buy 10 contracts, it's close to $10,000 you're making on these moves, and it's been a very, very good environment. So right now we have a bit of a larger range that we can watch. We have the low end that's at the lows that we made to 26.79. This is the top. This is going to be very difficult for the bulls to get through. If they do, then guess what? We're probably coming up to upper levels, possibly to 2800. That doesn't look like it's in the cards, but we still have time that if something did pop up, it would fit the time period. But right now we're electing this as the top. If the bears take out this 2677, I believe we are coming down to the 2596 level and possibly even lower. So again, getting short at the 2707, and if a potential target's down to the 2592 or even say the 2692, I'm sorry, the 2607. I'm sorry about that. it's a 100-point move. And again, you're getting in near the top up here on a short side. So to zoom in a little bit, the bulls, they have to get it above the 26.11. If they do that, then they could come up and test a 27.17. The bears, if they get it again through this 2700, their bare minimum are going to come down and close this gap 26.90. And then the next target would be the 26.76. The bulls, again, above this 26.12, they're probably going to come up, test the 27.18, possibly 27.22. But the important part that they're going to have to deal with is getting through this 27.42. Until they do that, the bears are in control. And that's really about all I have for tonight. So we have that $50 special for the 3 weeks. We only have about another 10 subscribers left on that. Once it's there, I'm removing it. You can wait until next week. Hopefully no big moves will take place. And with that, have a great night, and I'll talk to you guys tomorrow.